Over the past decade, one of the absolute best performing stocks is actually not a tech stock, it's Domino's Pizza, stock ticker DPZ. They're currently trading at $364.47 per share. Now, year to date, we can see they're down about 34%. They were trading as high as around $560 per share, but you can see they've dropped about $200 in share price. Now, again, if we look at that 10-year price history, we can see they're up almost 774%. Now, as a dividend growth investor, there's actually something that I like even more than this. If we jump over and look at their dividend history, we can see that their 5-year compounded annual growth rate for dividends is almost 20%. Imagine getting a 20% pay raise every single year. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Domino's Pizza. And we're going to be looking at 4 different valuation models. We'll be looking at Graham's valuation, a discounted cash flow model, multiples valuation, and a dividend discount model. And all of this will roll into our output tab. So let's go ahead and jump over to our stock screener. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. But let's go ahead and come up here and we will plug in the stock ticker for Domino's Pizza and hit enter. And you can see all of this data is going to automatically load in. Now you can see we're looking at a 365-day change chart. So it is relatively low compared to the price action over the past year. If we come over here and look at the dividend data, we can see they're paying out $4.40 per share, which gives them a starting dividend yield of just 1.21%. So not a very high starting dividend yield, but obviously we're going to look at the dividend growth a little bit later. Now the payout ratio is only sitting at about 32%. So this is a very safe and sustainable dividend. If we come down here, we can see analysts currently have a target price of about $373 per share, and the beta for this stock is sitting at 0.69, so you shouldn't see a whole lot of volatility. Now, something that's really impressive about this stock is institutional ownership is around 97%. Institutional stock investors really love this stock, which is actually a really good sign. It gives me a lot of confidence in the company. But let's go ahead and move forward and look at our first valuation, which is going to be Graham's valuation. And this is a valuation model invented by Benjamin Graham, one of the authors of The Intelligent Investor. And we can see the formula he lays out for us right here to calculate intrinsic value. So we're going to plug in all these variables right here. You can see we have the earnings per share for Domino's, our growth rate projection, and the current yield on AAA corporate bonds. When we plug all of this in, we come to an intrinsic value of $210 per share, which is quite a bit lower than the current trading price. Now, what's really driving this valuation lower is going to be this current yield on AAA corporate bonds. Earlier this year, it was as low as 2.8. So if we were to plug in 2.8 right here, we can see it jump up quite a bit. Still not quite as high as that current trading price, but a lot closer to it. But let's go ahead and switch this back and move on to our discounted cash flow model. And the idea behind a discounted cash flow model is we should be able to value a company based on how much future free cash flow they're going to produce. And in order to perform this valuation, we need to project a growth rate to our future free cash flows. So to do this, you can see I plugged in the historical free cash flow for Domino's so we can see our year-over-year growth rates grown at a tremendous rate over the past few years, as we saw earlier. But I'm projecting a growth rate of 11% to the future free cash flows for the company and to the terminal value, which is the sum of the future free cash flows past the year 2030. I then took the present value of these future free cash flows and added them all together here, added Domino's cash and subtracted out their total debt to find their equity value. I then divided by the number of shares outstanding. We came to a discounted cash flow price per share of $409.20 per share. But before we move on to the multiples valuation, I want to take 20 seconds to say thank you to Mandel Capital Management for sponsoring this video. The Mandel Capital Management Investment Checklist is a book that covers all things value investing. The book answers many of the questions value investors run into, and it also outlines how value investing can lead to superior long-term returns for investors. You can buy this book on a discount at the link in the description. Now, moving forward, we're going to be looking at the multiples valuation, and you can see here, we're taking some companies that are similar in structure than Domino's. We're taking their stock price, dividing by the earnings per share to find their price to earnings multiple. We then take the average price to earnings multiple for these companies and multiply it by Domino's Pizza's earnings per share, and we come to an intrinsic value of $438 per share. So we can see the average price to earnings for these comparable companies sitting at 35. If we jump back over to our stock screener, Domino's current price to earnings is only 29.4. So maybe there's some potential there to show that this company is undervalued. Now, the last valuation that we'll look at is one that I love to look at. It's going to show us dividends and dividend growth. with the dividend discount model. So what we do is we essentially plug in the quarterly dividend payouts for this company over the past few years so we can see how much they pay out each year, and this will allow us to see our year-over-year growth rates. And again, like I mentioned earlier, this company has had unbelievable dividend growth. We've seen 18%, 20%, 20.51%, and 17.2%. So moving forward, I'm projecting a pretty high growth rate of about 7.8% for this company. Now keep in mind, that is projecting it out for the lifespan of this company, so that's a very high growth rate projection for dividends. And anytime you have that high of a growth rate, there's two things that you do want to glance at, and we already mentioned them earlier, but you want to come over here and look at the payout ratio, and it's only sitting at 32%, so that's a very safe payout ratio. And like we saw here, we are projecting good free cash flow growth, so this is a very sustainable dividend growth rate for this company. So after applying our discount rate of 9%, we come to a dividend discount model price per share of $395. So when we jump over to our output tab, we can see all four of our valuations: grams at 210, multiple is 438, discounted cash flow at 409, and dividend discount model at 395. So we definitely have an outlier here with grams valuation. It's definitely going to be due to the current yield on AAA corporate bonds driving that valuation model down. But when we average all four of these together, we come to an intrinsic value of $363 per share. Now, something that we always want to do as value dividend investors is apply a margin of safety. So let's say in this scenario, we wanted to apply a 10% margin of safety. We'd want to buy in at around $326 per share, meaning now is not quite the time that we want to buy. If we jump over to our Seeking Alpha, let's look at year to date. We can see that there has been opportunities where the company has been trading in that price range, as we can see right here. I've added a few shares in that price range myself. Now, you may want to consider the stock even at its current price just due to the free cash flow growth and the dividend growth that we've seen, and consider the fact that the current market conditions are going to lower grams valuation. If this was higher, maybe this intrinsic value would be closer to $380 or $390 per share. But there you go. There is a stock valuation on Domino's Pizza. Go ahead and let me know what you think of this company in the comments down below. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.